I don't think the general is a fan of the Wall Street crowd. Speaking of whom, we got Heather Zamaraga here and Scott Martin. All right, guys, I assume, at least Scott, you got the big boy pants on addressing that. But what he is saying, and Heather, what he's saying is Wall Street's obsession and on pouncing on what it doesn't know is a little bit unseemly, but it is what it is. Heather, what do you tell your investors when they see this kind of thing?
Well, put your big boy pants on, right? It's a flight to safety, flight to quality, obviously with the 10-year treasuries hitting all-time lows as well as interest rates across the board. This is a good gauge for everything from mortgages, which are going to pay to take out a loan, as well as credit cards. And it's also a good gauge usually of the health of the economy. In this case, it's not, because the U.S. economy is on solid footing. This is more a situation of a horrific potential pandemic where people are buying our bonds, sending the yields lower, and the stock market as well.
Yeah, but you know, they're not just lower; they're like incredibly record low. And I'm just thinking when a 10-year note is yielding not all that much over a single percent, and I think of how that translates into much lower mortgages, much lower auto and related loan rates, you would think that would be a nice sort of backdrop for the markets and a point at which you get that inflection where people say, all right, let's buy some stock.
I agree, Neil. And I'll tell you what's interesting, though, as a money manager, as somebody who invests money for clients, what we've been doing is finding total return in bonds and dividend or yield in stocks. And that is, in a word, messed up. I mean, that shouldn't be that way. It should be the other way. Yield should be in bonds and total return should be in stocks. But frankly, as you pointed out, that's the way it is. And so I will tell you, though, I'll give you three things that were really good today. You mentioned kind of the hints of what the promise may be on the close today is that the SOX index, which is the semiconductors index, so think about the chips that go into your computers and phones, that was up all day long. Tech was up on the day as well. So other NASDAQ stocks like Microsoft and Apple as a conglomerate were up. And gold, which is a fear trade, which is something that we still own, mind you, because we like it, because it doesn't correlate to the markets, was down big today. So three good reasons today to be somewhat optimistic about next week.
All right, we have trader Peter Tuckman joining us outside the New York Stock Exchange. And Peter, one of the things I noticed, not only that we closed off our worst levels of the day, but there was this dramatic improvement in the rate environment. By that, I mean much lower. That could support the consumer, coupled with much lower energy, gas prices and all. For the consumer, at least, whether he or she is in the market or not, they're going to have a little bit of free cash coming their way. What do you think?
I kind of think that I appreciate what you said about the gold. I was sort of looking at the gold as a capitulation trade because they were selling the equity, selling the gold in a big way. Maybe there was a margin call involved, right? But I kind of think, that you're right, that, the fact that gold was down that much, I kind of think people were trying to get into cash. That seemed like the only safe haven on top of people trying to support bad positions in equities. And, it was a fascinating day. It was a fascinating week. I don't go along with the trade that things are that much better. I kind of think that the rally on the close was a huge short cover from a position that was so heavily put on for the week.
That's very interesting. So, Peter, when you see the fact that this was one of the fastest corrections on record for the market, and the fact that it eased up a little, and I said, we're still down 357 points to your point. So you still got your worries going forward.
You know what? We posted out. We had a huge sell imbalance on the close. The market kept trying to get off the mat, but it didn't. We rolled over big, literally 15 minutes, 10 minutes before the close, we were down 950. So my gut is that there was a big push on the short side, and basically people did not know. The Fed, during the day, the Fed did come out. Powell said that, that he would use the tools necessary to support the market if possible, that the economy was still strong, and that sort of took the real fear out of the market for the moment. But I think that the sell side into the 350 posting with $3.5 billion for sale, basically people did not want to go home with the idea that maybe the Fed would say something, maybe things aren't as bad as they seem, and I kind of think it was more of a short cover. I don't think the anxiety's off the table. I think that gold trade is one where people wanted to be in cash. Maybe some people decided to buy something into the weekend, but I didn't feel that.
That's very interesting. Scott Martin, one of the things we did see is that people are now increasingly betting the Federal Reserve is going to cut interest rates to help alleviate this pressure. Now, even though a number of district presidents and Fed officials here and elsewhere have been sort of poo-pooing that talk, I think people who bet money on this are seeing 100% possibility the Fed funds, the overnight bank lending rate, is cut. Do you see that?
Yeah, so you're telling me there's a chance, Neil, maybe 1 in a million, you know? I mean, yeah, I think there's definitely a possibility the Fed's going to come to the rescue here. And kind of contrary to Peter's point, though, maybe, Neil, is the market already knows that. I mean, the market already knows the Fed is here. We got 3 rate cuts last year. The market already knows that Powell was going to come out and say something.
Heather, do you see the possibility that Fed cuts rates this soon? Would that panic people? Real quick.
Yeah, sure.
March.
But no, it shouldn't panic people. Even if the Fed cuts rates, they're already heading lower on their own. I don't think the U.S., we should have a situation of negative rates. It's not posing well for the rest of the world, and maybe we don't need it.
If they don't cut, we're in trouble.
We will watch it
All
very,
the people
closely.
want it.
Fair enough.
All right, I hear you. We got to focus on the virus. We're still waiting to see the virus and whether it's mutating into something that could mutate markets as well after this.